Ladies and gentlemen, what the heck is going on with Tesla stock? It hit a low of $361 and now today up 108% to $392. So congrats if you bought that dip, ladies and gentlemen. But there's no news surrounding this company that should be driving this stock up so high. Elon Musk has even been keeping his mouth shut. In fact, the only thing that's really changed is a lot of bulls have come out of the pen and analysts have jacked the rating up. But is that to justify the stock price for where it sits? But there's one analyst that I want to focus on in this video that really surrounds the whole Tesla world, and we're talking about Cathie from ARK Invest. Her portfolio, or ETF here, one of her largest holdings being Tesla, has helped drive this stock back up. So yesterday on CNBC, I ran into Cathie Wood, and she had an incredible interview touching base on her views on the market, along with her raising optimism around Tesla, and she thinks it's going to dominate even more than she said in the past. So ladies and gentlemen, I look so forward to breaking this down for you. So let's jump right into this.
Drop it.
Oh, welcome back, my passive income investors. I like to one of the most bullish analysts around that Tesla stock, and I can't wait to get into this. So let's just start her up.
Of course, one of the stocks that Cathie loves a lot is Tesla. Want to talk to her about that one as well. First of all, Cathie, before we even get to Tesla, just what's your take on where the market is right now? We are looking at a market that really looks like we're back in 2019. Does that make sense to you on a risk-adjusted basis?
Well, the way we've been looking at this market is it's more like that in 1987 when we went through the Black Monday. The market was down more than 20% in one day. So that was a real shock to the system because portfolio insurance failed. And then again at 9/11, another shock to the market because of the terrorist attacks. And what we saw from those two shocks, these were exogenous shocks. They did not come from within the economy. We saw that the trends in motion before those shocks remained in motion after. So the 80s, great bull market, great growth, continued apace after several months of settling down and allaying fears. And then in '01, we were in the middle of the tech and telecom bust. Trend in motion remained in motion. We were in the bust for another 18 months, roughly. We were in a very strong economy before this attack and the shock. And moreover, the consumer was doing very well and had a very high saving rate, 8%. Businesses had been pulling back for more than a year because of the China trade conflict and because of inverted yield curves, scaring them about recession. So they were also in good shape in terms of didn't have a lot of inventories, weren't even keeping up with demand, had pulled back on capital spending. We think that the consumer will come back and that businesses are going to have to chase them. So we do believe this is going to be more V-like than most do.
So I just want to touch base on this really quick. She made a lot of interesting points, and I wish there was some information or links backing that up because I don't know where they come up with that 8% savings rate across the board, considering if rich people are saving more money, does that get thrown into the broader median? I'm not too sure about that, considering people have probably leveraged themselves more than they ever have, considering you can get your phone on a plan, TVs. I mean, everything comes on a subscription service these days. But before I get back into this, guys, I really want to talk about this prediction she just made.
I quickly want to touch base on what Cathie says here, because she kind of hits a home run with her V-shape example recovery. If that is the best case scenario we can have. And if she did touch on really good points about how the economy was building itself up during the tariff wars, and the banks, even here in Canada, have been building up those loan loss provisions. So there was a half-decent cushion build up for this horrible pandemic that we are facing. But still, guys, she's a big bull. I'm a big bull. But sometimes you still have to keep the other worst case scenarios in the back of your mind. And there's only two other ways that this can go. Now, for the best case scenario prediction to come true, we're going to have to start seeing those infection numbers start coming down. And then on top of that, in the next couple months, we need to start seeing the economy slowly back opening up. And things might be just fine. You know, that stimulus helped, any tax breaks they're introducing, things might not be that bad. Now, on the other hand, this could get spat out a little worse than we'd like to see. And in the worst case scenario, guys, the virus keeps spreading, they extend the shutdown, and then on top of that, we end up running into a recession. Because the government can't keep handing out stimulus checks. At some point, you're going to lose your job, and that check's going to run out as well. And that would just head us into the dead worst case scenario. And that could happen over the next 3 to 6 months if things haven't recovered at that point. Because if things don't resolve over the next 2 months, this entire year could end up being a write-off for most companies. And the prediction a lot of people are having is the moderate recovery or the U-shape recovery, which I could see in the next 2 to 4 months if things don't open up exactly as fast as we want, but we do contain this. And, maybe there's talks about a cure that come into finalization. I mean, we could start seeing a nice slow recovery over the year. But considering the markets are sitting up in what looks like a V-shaped recovery already, there's a little too much optimism out there. And I still think, in my humble personal opinion here, guys, I think we're going to see more of a U-shaped recovery. I still think there's going to be some bad news hidden around a corner, and hopefully it's not that bad where it sends us into the recession, but we're all just making predictions here.
All right, let's just get back into this.
How dependent is that on the government basically throwing helicopter money at everybody?
Well, it is. Yesterday, we got news from the Fed. M2 growth is up in the mid to high teens. We have not seen this since the early 80s. So we certainly see the stimulus out there. I think if, and my mentor, Art Laffer, has been espousing this, if we don't get off the ground as quickly, if it's frustrating, I think that one of his ideas, a payroll tax holiday for both sides, employer, employees, that could really encourage, would be a huge incentive to get activity back this year. And I've heard President Trump mention it. I don't think they've done anything about it yet, but I know they're thinking about it.
But the reason I ask is if this does extend longer, and clearly there are people who are going to be going back to work, and hopefully soon, and hopefully in May, we'll see some people back at work. The question is, I think, less on the supply side, meaning there's going to be the availability of supply. I think the real question is going to be on the demand side, or do you not see it that way?
No, as I said, the consumers certainly went into this on average in good shape. Now, obviously, some people with not a lot of savings buffer have been hurt tremendously in here. But I think on average, that 8% saving rate was a nice buffer to enter this. And I do believe, I believe there's a lot of pent up demand out there as long as people have kept their jobs. And that's why I think this administration is trying to keep the infrastructure in place so there are jobs for people to go back to.
Okay. And then finally, just cars, because we always talk Tesla with you. You think people are going to be buying cars this year? There's a report out that in the EU, sales for vehicles down about 55% across the board last month.
Right. And I think the traditional auto industry is in a heap of trouble here. And because of that, we're seeing them scale back on investment spending, including on electric vehicles, which they really shouldn't be doing that because that is the new world. But I don't think they have any choice. They're cutting back on everything. So I think that Tesla's market share is going to be much higher in this space than we originally thought. We've been in our assumptions, assuming that they would maintain market share. We were beginning to believe they would increase market share because they're so far ahead of the competition. Now we're pretty sure of it.
Well, there you have it, ladies and gentlemen. She's even increased her optimism a little bit more. And I don't think she's wrong, guys. This is going to put a lot of pressure on those other automakers. And, Tesla's the bull of the world and money's just flooding in, guys. So they're going to continue to dominate. I'm happy I do have the shares that I have here, guys. And like I said, I made a video yesterday about my portfolio. I don't got to go on about it anymore. But I'd love to know what you guys think. Do you hold Tesla? Do you like it? What do you think of ARK Invest? Maybe you hold some of her ETF there, or maybe that fund in your portfolio. I'd love to hear about it in that description below, but I'm pointing at that like button because you need to hit it, guys. I put a lot of work into these videos for you, so stay cool, stay awesome, and I look forward to catching you tomorrow.